Hello, I bid you welcome to this episode of our ICAN on Air educational series, championed, of course, by ICAN. Same chapter, new chapter mantra. And the aim is to benefit our various publics in education and cutting edge knowledge sharing. And today we seek to interrogate our understanding on VAT. Yeah, you had that. Value added tax application on cross border transactions in Nigeria, with simplification and registration regime for non resident suppliers, leading to our greater economy from cross border payments on financial transactions where the payer and the recipient are based in separate countries. And joining me to throw deeper insight to these interrogations is Mr. Kehinde Kajesomo FCA. He is Deputy Director and the Head of Treaties and International Tax Policy, Division of Tax Policy and Advisory Department of the Federal Inland Revenue Department. Not only that, Mr. Kajesomo is also the lead negotiator of the technical team that negotiates tax treaties for Nigeria. We shall be unveiling more on our esteemed guests in a question and answer interview segment on this program shortly. Also on this program, you'll get to know a bit of tips and bits about the Institute, to be members, and of course, how to advertise your products and services on this iconic ICAN on Air program. Please stay connected. We shall be back with you very shortly. Yes, Mr. Kehinde Kajesomo FCA, you are welcome to ICAN on Air.
Thank you, Mr. Moderator. It is my pleasure to be here tonight.
Nice to have you always. And to set the tone for this technical discussion, maybe technical, I know we have a way to try and break it down, to give a broad-based overview of how the discussions will go. We know that the VAT, value-added tax, arguably one of the most topical slogans across the country today. Please enlighten our viewers, especially non-professionals or non-chartered accountants, on what VAT is and its purpose.
Thank you, Mr. Moderator. I want to start with what is tax itself before we begin to talk about value-added tax. Tax represents a compulsory levy that a government imposed on a citizen, and of course is provide the basis for which government render service, provide infrastructure and other facilities for the citizenry. So that is where the government get revenue for it to perform its activities. And we say it's a compulsory levy, so citizen has to pay. Now, when we now say we have government has power to levy taxes, then we can now talk about what are the types of taxes government can levy. There are two broad categories. We have what we call the direct taxes, which is income tax, and we have the indirect taxes. Why is it called indirect taxes? It is indirect because it is not the person that parts with the money that bear the burden of the tax, or it's not the person that actually pay the tax that bears the burden, meaning that the person that paid the tax can transfer the burden to another person. So that is what distinguishes indirect from direct. Why indirect? The person that pays bear the burden. For example, our income taxes, personal income taxes for our salary earners and other individuals. When you pay your personal income tax, or company, you pay your company income tax, that is direct tax. But for indirect taxes, when those taxes are paid, the person that made the payment can transfer the burden to another person. And that is one example is consumption taxes. And that is where also value-added tax come in, because value-added tax is one example of consumption taxes. So what happens is that when you purchase or you buy goods or service and you make payments, the person that you have that have demanded tax from you, we add, that have demanded payments, that have sold goods to you, we add a percentage. Presently in Nigeria, it is 7.5. That seller of that goods or service, we add a 7.5 tax on that prices the person has charged. And when you pay, that person remits that tax to government. So it's indirect in the sense that the seller of that items will pay the tax to government, and they recover the tax they have paid from the person they are selling to. So that's what makes it indirect. They can pass the burden. When they are buying, they incur taxes, and when they sell, the taxes they have earlier incurred, they pass it to the person they have sold to. So that is a peculiarity of indirect tax, on which value-added tax is a typical example. Now, what distinguishes value-added tax from other indirect taxes, in the sense that as value is being added or value is being created, the tax is on only the portion of value that is added. It is the final consumer that now pay the whole amount. Let me give you a simple and short example. If I sell orange and I buy the orange, assuming orange is taxable under value-added tax, just an example. If I buy that orange, which assuming is taxable, then, and when I'm buying, I pay the value-added tax. Then when I'm selling, I'm going to add value-added tax, but the difference, which is my selling price and my buying price and the selling price, the difference is the value that is created, and the tax on that value is the value added. So that is what which VAT from other taxes.
Thank you very much for that breakdown. And so a number of changes have been made to Section 10 of the VAT Act in the past 2 years. What were around these changes?
Now, the way transactions are done presently and the way economy is run has changed. Previous, maybe 20 years ago or a few years ago, what you have is a situation where if a person, for example, if somebody wants to buy from abroad, if I'm a shoe seller, I will likely import the shoe from abroad, maybe through a container. The goods will enter through the port, and I will likely pay VAT at the port when I'm clearing those goods. As I'm moving the goods to my warehouse, I will likely pay VAT on the to the transporter. Then, as the goods move to my warehouse or to my shop, as I'm selling, people come to the shop and they buy. Then VAT is also added at the shop. The VAT on all these transactions goes to government. But the way transaction is done through the digital economy, through the improvement in technology, now differs. For example, I can sit on my desk and order for shoe from abroad, and the shoe is sent to me through means, and it comes singly. It can come through the port, but the fact that it's not coming in a big container, meaning that when it comes, maybe by the time you compute VAT, it might be as little as 0.5 USD. So the effort in running after such little transaction will overweigh or outweigh the results or the taxes that is going to be collected from it. So as a result, those VAT are not being collected and are lost. So you move from a situation where goods are coming through the ports and they go to the shop and they are bought at the shop, VAT is paid, to a situation where most of us sit in our desk now using our phone or our laptop. We apply for goods and services and we don't pay the VAT. And the implication of that is on government revenue. So you have a situation where government revenue that's supposed ordinarily to come to government in previous years no longer come because of the way transactions or because of the way businesses are being conducted using.
Excellent, Mr. Kajesomo. So, in other words, it's widening the capacity to earn tax. And I
Yes.
quickly just want to ask you now, what makes digital transactions different from others? Well, I think you have explained that. And
Yes.
what challenges does it pose to warrant this specific regime?
Yes. So because of this difference or challenge I've posed, then government has to find a creative way to collect the taxes. And the creative way is to amend Section 10 of the Value Added Tax Act.
I
Yes.
see. Okay.
So
Very
the
good.
amendment that has been made now is to allow the tax authority to find a creative way of appointing an agent for the purpose of collecting the VAT that is being lost through the new way business is done, through the digital economy. So what the new rule as allowed under the VAT Act, that's Section 10, Section 3, is that the service or the tax authority, which is the Federal Revenue Service, can appoint an agent to help collect those VAT that are hitherto being lost from digital economy. And what has the service done through this new regime? What the service has done is to appoint the suppliers, that's the non-resident suppliers. So because the non-resident are seated out there and they send these products, these items to different taxpayers in Nigeria. So what the new regime says is, you non-resident suppliers, when you are sending these items to consumers in Nigeria, add the VAT to those items, aggregate this VAT and render the returns and make payment to the Federal Inland Revenue Service. So those non-resident persons or suppliers will act as the agent of the service, that's Federal Inland Revenue Service, for the purpose of collecting the VAT that are hitherto being lost. They collect the VAT and remit those VAT to the Federal Inland Revenue Service, so that at the end of the day, the VAT that is being lost presently are being recouped and sent back to government of Nigeria.
Super. Now, what is simplified registration and compliance regime, and how does it help to solve the VAT challenges of the digitized economy that you have described?
Thank you so much, Mr. Moderator. Now, I've spoken about the peculiarity of this regime. So you want to appoint somebody that is not in your jurisdiction to help you collect the VAT or the tax. Then the first question is, if you make this system cumbersome, if the person refuses to undertake that obligation for you, what can you do? Because those people are not in your jurisdiction. So yes, there are a few things that can be done, but they are limited in scope. So the best way to do it is to find a way of getting them to comply willingly. And one way to make them to comply willingly is to make it simple for them to implement and operate. So, and that is where the name simplified registration and compliance regimes come from. It is simple to administer or simple process for the non-resident to comply with. So what the guideline now does is to specify rules that will, for example, how will they, when they want to register, how do they register? You don't expect them to travel down here or send a staff here to come and register. So you have to create a simple way where how they can sit in their own jurisdiction, click on a system or a computer and carry out their own registration without hassle. They can also sit in their own jurisdiction. They can file their returns without hassle. They can sit in their jurisdiction and also make payments. They don't need to come to Nigeria and go into Nigerian banking hall and be making process of making payment. They can click on a button in their jurisdiction and they make payments. So those are the simplification that need to be brought in to encourage the non-resident suppliers to comply with the rule. And of course, it's not only Nigerian rule, it's a rule that has been introduced through a guideline that has been issued by OECD, which is Organization for Economic Cooperation and Development. It is called the OECD VAT GST guideline. So it's what different countries, jurisdictions has come together to agree that because of these challenges we have under the entire economy, this is the best way, or this is the way to go to ensure that jurisdictions are still able to recover the taxes that they will have lost if those regimes has not been implemented.
Fantastic point, Mr. Kajesomo. And Mr. Oleri Babashola is asking, you might have covered it, that have we ruled out use of technology instead of using agents, or they are supposed to complement agents, go technology?
Very good question. Both go together. As I said earlier, I said they need to sit in their jurisdiction, they register. How will they do that? Through technology. They sit in their jurisdiction, they file returns. How will they do that? Through technology. So the way the technology is developed, that is being implemented not only by Nigeria, as I said, it is difficult for you to implement the technology without those non-residents being part of that technological process. So what happens is that Service will deploy the technology, and over there, those non-resident suppliers will click on those software, and using that software, comply with the process and render the
and then the process goes. Now, let me ask you, Mr. Does all taxable supply from non-residents fall under this regime? If not, how about taxable supplies from a non-resident supplier, the one we call NRS for short, not falling under the regime?
Very good question, and thank you for the question, Mr. Moderator. I need to clarify. When you look at Section 10 of Value Added Tax Act, it deals with cross-border transactions. That is VAT in respect of transactions across border. And transaction across border comes in diverse or various ways. Transaction through digital means is just one of them. For example, I can have an agreement for somebody to supply me goods, and the goods come through the port, and I make payments. It is still transaction across border, but it's not done through digital means. So this simplified registration and compliance regime covers only the digital transactions or transactions consummated through digital means. Every other transactions does not fall under that rule. Now, to also clarify that when we talk about this transactions that fall under this rule, is we have categorization: goods, services, intangibles. Presently, this regime does not cover goods. it covers services and intangibles. So these regimes cover digital services, digital intangibles. If it's digital goods, it will not be covered. If it is services, but it's not digital, it's also not covered. If it is intangible and not digital, it's also not covered. So those are covered by the previous rules. And what does the previous rule say? It says the person to whom the goods or service is supplied in Nigeria will deduct the VAT and remain to the service. That is they mean the and remain to the service. Then there are other category. There are some non-residents that are called the fact that they have what is called permanent establishment, or they have fixed base, or a form of taxable presence in Nigeria. So if a non-resident already have a taxable presence in Nigeria, we can see you in our jurisdiction. There's no point going through this regime we are talking about, because we can see this person in Nigeria. So the person, they will collect the VAT and remit like any other person that is in Nigeria, or any other company that's in Nigeria. So the rules does not cover everybody. If you have a physical presence or a taxable presence in Nigeria, like any other person in Nigeria, comply with the tax rule. This rule only covers where the person selling has no form of physical presence in Nigeria, and that selling or that service is through digital means. That is when this rule applies.
Super. Tunde Bello comes with this. Can we review the issue of VAT adjustments on some specialized businesses like food sales, processed package, and raw food supply contracts? Also, the issue of exemption for payment and filing returns. Kindly add your insights on the best practices on part of taxpayers.
Thank you, Mr. Moderator, for the question. But I must confirm that presently, says VAT on basic food item is not liable to VAT. So yes, I agree that the last time I was using analogy example of orange, but don't forget I said if it's a taxable transaction. So let me confirm that anything basic food item is not liable to VAT in Nigeria. So
that is quite clear.
Farm produce, vegetable oil or cooking oil, vegetable, all those basic food items,
that is quite clear.
Are not liable to VAT in Nigeria.
Thank you for that. Now, let's get back to non-resident suppliers. When they are appointed to collect VAT for this service, what happens to the legal obligation for the businesses to self-charge on such transactions?
Very wonderful question also. And I need to, the last time I tried to distinguish the service or the transaction that is applicable under this regime, distinct from those that will not be under the regime. And I spoke about goods and transactions that are not through digital means. So those transactions, there's a process of collecting VAT on those ones. And the process, the law specify that the person to whom the service or the item is supplied in Nigeria, we have the obligation to collect the VAT or to withhold the VAT and remit to the Federal Inland Revenue Service. And that is us, that continues to apply. So in respect of digital transaction, the moment the non-resident supplier has collected the VAT, the obligation on the Nigerian consumer extinguish. So because the VAT is supposed to be collected once, not twice. So if the non-resident supplier has collected the VAT, then the person to whom the goods is supplied in Nigeria will no longer have obligation to withhold, because two people cannot collect the same VAT. So what the law says is that the moment the non-resident supplier that have been appointed, the moment that non-resident collect the VAT, the obligation no longer falls on the person in Nigeria. However, if the non-resident supplier has not collected the VAT, then, as I said, is going to be single VAT, not double. So if the non-resident supplier have not collected, they have the primary obligation. But if they have not fulfilled their primary obligation, then we have secondary obligation on the Nigerian consumer to
Super.
deduct the VAT and remit. And if the VAT is not included in the invoice, then, and the VAT of course has to be paid, then the person in Nigeria has the obligation to self-charge
Okay.
or self-account for the VAT.
Very, very interesting. And now we look at this question that is coming in, differential in VAT rates in various jurisdictions, and how is that addressed by OECD guidelines? Any insight?
Thank you for the question. VAT rates or the tax rate is a domestic rule or domestic right or sovereign right of each jurisdiction. So every jurisdiction or every country has the right to specify its VAT rates or any tax rate whatsoever. So the guideline issued by OECD did not specify any VAT rate. What the guideline only specify is how to make collection simple and easy. Since based on the old rules, it's going to be very difficult for jurisdictions to continue to collect VAT from digital transactions. What the guideline did, the OECD guideline, is to provide a simplification process which jurisdictions can adopt. And that is what we have done in Nigeria, to look at those simplification process and leverage on it to issue our own guidelines. So the OECD guideline is different from our own guidelines. The only thing is that our own guidelines look at those OECD guidelines and leverage on it to develop our own guidelines and to make the collection simple to the extent that we are able to collect and utilize the tax money here in Nigeria.
Interesting point. And where non-resident suppliers collect the tax, how do the local business claim their input?
Another good question, Mr. Moderator. Now, Section 17 of the Value Added Tax Act specifies the rule for collecting inputs or recovering VAT inputs. And under that Section 17, subsection 1 talks about the input-output mechanism. That is for goods. That place is specific. Goods that is kept in stock of goods for resale or for further production. So, and if you remember that this regime does not cover goods, as I said, for now the regime covers services and intangibles. So there is no issue regarding subsection 1. Where we now have further clarification is, now if you go to subsection 2 of the value added tax, that's section 17. Subsection 2 of it has A and B. A spoke about inputs in respect of services and overheads, while subsection B spoke about input on assets. Now, for input on services, input on services and overheads, the law specifies that it should be recovered from the P&L,
right,
or income statement. So if you are paid VAT in respect of services under the digital economy, how do you recover your input? The law says, since input on service overhead, say recover it from your income statement. Then B, if it is VAT on asset, it says capitalize the VAT. That's add the VAT to the cost of asset. So, for example, if you have bought a big musical instrument from abroad and you have used digital means to buy it, and you need to capitalize that musical equipment, then the amount to be capitalized is the cost of the equipment plus the VAT.
Super.
So you have the VAT capitalized both.
Super. Mr. Kajesomo FCA, thank you. And if you are just joining, we've been interrogating our understanding of VAT applications on cross-border transactions in Nigeria, the simplification registration regime for non-resident suppliers. Guesting with me is Mr. Kehinde Kajesomo FCA. We are going to be going on a short break. Please keep your questions coming. We are going to be back with you with our guests and more questions very shortly. Don't go away. Mm. Mm. Okay, while we are waiting for the back end team, we might as well just if you are still watching, Mr. Kajesomo is being on, telling us non-resident suppliers VAT in general terms. Let me ask you, Mr. Kajesomo, is the non-resident supplier under obligation to appoint physical representative in Nigeria?
Uh, Thank you, Mr. Moderator. It's a very good question again. If you look at the section 10 of the value added tax, subsection 5, it allows them to appoint an agent, but it is at their discretion. If you
Hmm.
look at the way I've explained the process, there is a software that is deployed. So a non-resident is there abroad, click on that software, conduct the transaction, register, pay the VAT, pay the VAT or make remittance to FRS, then file returns using that software.
Hmm.
So it has no reason to come to Nigeria whatsoever. So it has no obligation to appoint an agent in Nigeria.
Okay.
Based on the rules that have been deployed, in fact, it doesn't have need for a non-resident supplier. But it doesn't have a need for an agent. However, where on their own, at their own discretion, they believe they still need an agent in Nigeria, the law allows them to appoint an agent in Nigeria to help them comply with the rule, but at their own discretion, no compulsion. And of course, based on the rule we have deployed, there's no real necessity for the appointment of agent, but it depends on individual preferences. So if for the non-resident, based on their own individual preference, they want to have an agent in Nigeria, the law allows them to have that agent to help them comply with their obligation.
Super. I'm a bit struggling with Femi Olarinde question. If we need to clarify non-residents, okay, yeah. Can you please clarify if non-residents automatically appointed under this rule or the service will have to appoint, maybe to appoint them,
Okay,
specially or so?
I think I understand the question. So do they need to be appointed specially or they are automatically appointed? Now, what the law says, the law gives the service the discretion to appoint under subsection 3. So the service can appoint anybody, and the service can do specific appointment. And based on that, last year, the service has done some specific appointments of some non-resident suppliers, asking them to be the agent of the service. But based on the outcome of that appointment, of course, what the Federal Land Revenue Service now did was to issue a guideline, because the law also allowed the Federal Land to issue a guideline appointing all non-resident suppliers. So there are two issues here. The Federal Land Revenue Service can do specific appointments, which they have been doing since last year. But based on the outcome that they have seen, FRS has also issued a guideline now appointing all non-resident suppliers of digital services. So based on that guideline that have been issued, there's automatic appointment.
Okay, automatic appointment.
Yes.
I'm going to try and give you a breather now.
Doesn't need to wait. Yes.
I'm going to give you a breather now. We go on a short break. We just go on a short break, and listeners and viewers, please stay put. We are going to be back with additional questions. You're welcome back. And Mr. Kehinde Kajesomo FCA, just before we went on break, uh, I cut you short about the appointment that has to be specifically when. Let me allow you to rest that your point very, very briefly.
All right, thank you, Mr. Moderator. Just to clarify the fact that, so with that guideline that has been issued, the
Okay.
all non-resident suppliers are automatically appointed. So they don't need to wait for a specific letter from Federal Land Revenue Service appointing them as as an agent. That guideline has appointed all non-resident suppliers. But we should also remember that that guideline has still not taken away the power of the service in the law to do specific appointment. But it's just that what the service has done is to exercise its other power to appoint everybody that is a non-resident supplier under the digital service, under the digital economy, or that
Excellent.
services through digital means.
And Mr. Shosonlu Olusoji, penalty for non-compliance by non-residents. Any penalty?
Thank you, Mr. Moderator. Yes, there is penalty. Although the essence of this rule is not to penalize.
Not to be punitive.
So the objective is not to be, as I said, somebody is not within your jurisdiction. So and that is the essence why I simplify. You want to make them committed, as much committed as possible to deliver on this. And before we started, that was how we had several engagements with this non-resident supplier through a body called BIAC. Is an acronym for Business at OECD. So that's conglomerate of businesses. We had serious engagement with them before we deployed this rule, and we have secured their commitment and they are buying to this rule. So we need to be clear that the objective of this is not to levy penalty. However, of course, where there's no penalty, then do you expect people to comply? So the penalty in the tax law is still relevant.
Okay.
And in the tax law, there's penalty for failure to register, failure to collect, failure to add VAT to invoice, failure to file returns. All those penalties are still applicable in this regard.
Super point.
To emphasize that the objective is not to levy penalty, but to provide as much assistance as possible to help them to comply. Because by them complying, we have money to spend as a government in Nigeria.
I'll quickly shift in Muftauddin Abdul Hakim for input VAT on telecoms tower. Can we use it to reduce our output VAT?
Now, I specify section 17.
Right.
Section 17 section 17(1) talks about the input that can be used to offset output VAT. And looking at this, telecom tower is not one of them. So
it's clearly not one of them.
It's clearly not one of them. So this telecom tower will fall under 17(2)(b), which is asset. So VAT on telecom tower should be capitalized with the cost of that telecom
roll over capitalization. Now let's look at this, Mr. Kajesomo. What currency will be utilized for remittance by non-resident suppliers whose currency of transaction is neither naira, dollar, pound, or euro? The currency of transaction is neither naira, it's neither dollar, it's not a pound, or the euro.
Thank you. A very good question, Mr. Moderator. We need to also clarify that. And that's one of the power the service have under the rule, under Section 10 of the VAT Act, to make rule for the purpose of filing returns, payments, and so on. So what the service has done is to make rule in respect of those transactions or those currencies. The fact that those currencies, because if you look at VAT remittance account, the VAT remittance account is only in USD, euro, naira, and dollar. So, and if they have made sales in another currency and we don't have accounts for those, how do they remit? that guideline has specified a rule saying convert those other currencies to any of the four currencies that the Federal Inland Revenue Service have account for. So convert those currencies to either Naira. If you can't convert to Naira, to USD, to Euro, or to Great Britain pounds. So those currencies should be remitted in any of
that is clear. That's clear enough. And then Mr. Kajesomo, how will the non-resident suppliers, without the physical presence or physical representatives, get the service to resolve any issue that will naturally come anyway they may encounter as a result of this regime?
Very good question, Mr. Moderator. And as I said, it's not just about making a rule, but we need to provide as much assistance as possible to make them comply. And of course, it also boils down to the fact that we are saying simplified process, compliance regime. So the service in the guideline has specified email addresses, telephone contacts, so many, including our contact center. And we have men and women of the service manning those telephone, those emails, and as those issues are coming, the staff of FRS will be responding to those challenges and be attending to them and resolving them. And we have been doing so.
Super.
Okay. Yes, we have started. We are already having issues coming in, and we are resolving those issues. And I can say for now, not even most, we have not had any adverse complaints. So all those that have been appointed and they are complying, none of them has complaints against the service presently to say, oh, we had this issue, it was not resolved.
Thank you very much for that point.
Thank
you very much. Thank you very much for that point. And again, international trade, even local, is based on trust. You don't see him, you don't see her, you don't know them. They're supposed to do certain things for you, for product and service. And then we are now asking that the FIRS have to trust the NRS to remit taxes collected, especially when they are not within Nigeria's jurisdiction. Why? Why are we going to give such 75%, 85%, perhaps 100% trust? Why?
Thank you, Mr. Moderator. This trust is stemming from the fact that I gave a background to the rule. Number one is the fact that this rule is not just Nigerian rule. It's what jurisdiction sat down to look at. There's a challenge. How do we resolve the challenge? Then this is the best way to go to resolve the challenge. That's number one. So it is not peculiar to Nigeria. All the non-resident suppliers is aware of this rule, even before Nigeria introduced its own rule. The second reason is the fact that in implementing this rule, I said earlier of the buy-in we have from those suppliers. So it's not about forcing them to comply, but getting them to understand why they must comply and getting their buy-in to comply. And as I said, based on all those engagements, we have their commitments and they have been complying.
Okay.
So,
all right.
So prior to now, they've been complying, and we expect such compliance to continue. And of course, if, as I said, for non-compliance, then we have process. We have penalties that can be levied. And in addition to penalties, there's an agreement between Nigeria and other jurisdictions. So, for example, if a non-resident supplier after collecting the money, fail to remit the money, how do we get our money back? There is an instrument, international instrument, that Nigeria has signed into, which is called assistance in collection. So that means we can seek the assistance of another tax authority in another jurisdiction to collect our tax for us. So if that taxpayer think, oh, Nigeria, you can't get me, I collect the money and I won't remit, we can invoke that agreement or that instrument to get the tax authority of his home country to collect the tax and remit to the FRS.
Okay, super. I guess this insight will have satisfied Jamie Quadri Ayuba. Now he's talking about tax evasion. Thanking you, of course, naturally, for your presentation. And can you clarify how tax evasion can be reduced to the barest minimum under this digital tax regime?
Uh, Thank you so much, Mr. Moderator. The first one is this is technology driven, and we all know that in the face of technology, sharp practices is reduced to the barest minimum. Because I can tell you, based on the software that is being deployed, it's not the taxpayer that will say, "Oh, this is how much I've collected." Based on the technology that have been deployed, the responsible officer in Nigeria is the non-resident taxpayers person, non-resident person taxpayers office in Lagos that is driving the implementation. And from their office, they can click on the software. They know the number of transactions that non-resident has done with Nigeria. So the system will show the number of transactions and the VAT in respect of that transaction. So it's not an issue of somebody saying, "Oh, I only collected 50,000." The system will show how much transaction that you have sold to Nigeria and how much you have collected from that transaction. So that
Super.
is one area regarding the full, complete disclosure. And I've also mentioned if you have done complete disclosure, but you refuse to send in the money, I've also spoken about the issue of the fact that we can use an instrument, an agreement with other jurisdiction to invoke that
Super.
jurisdiction to collect that
Yes,
money for the service.
I know.
So by
Mr.
that,
Kajesomo,
we are able to reduce evasion.
as we now round up to try and put this to a close, and I ask you this question: how does a non-resident supplier know when it is under the obligation to collect tax under the regime? When does he? What does he know? How does he know?
Thank you, Mr. Moderator. The guidelines specify the threshold, because as much as we want to implement this, the service want to implement this regime, the service also want to bear in mind that what we call compliance costs and administrative costs. You don't want the cost of compliance to overweigh the tax that is to be collected. The same way you don't want cost of administration to overweigh
Mm, mm,
the revenue you want to collect. So the
mm,
service has set a threshold of 25,000 USD
mm.
as the threshold for company to fall under the regime. So if you are a
Okay.
non-resident supplier, the moment you have supplied in aggregate services or intangibles to Nigerian persons up to $25,000, you automatically fall under the regime, and that's non-resident suppliers is required under the guideline to register and start collecting the VAT and remitting it to the Federal Revenue Service.
Thank you very much for the insights and a lot of kudos and thanks for your exposition. A lot of viewers are seeing this as trading. And in rounding up, Mr. Kajisomo, what will be your last word on this subject to us?
On this subject is to encourage the non-resident suppliers to continue to comply with the rule, but not just non-resident supplier. All other persons not covered under the regime, they should continue to comply with the VAT rule, because it's not all about non-resident suppliers. It's about all we that are liable to tax in Nigeria, all persons that are liable to tax in Nigeria. We have the obligation to comply with the law, and we have a duty as citizens of Nigeria to show patriotism and collect revenue for the government to be able to run the activities, to provide infrastructures and so on. And for this program, I particularly want to commend ICAN for the conceptualization, and the presenter or moderator for the way this program is presented. This is a very good avenue to enlighten our tax professionals and Nigerians alike. So for me, it's a very good, excellent program that ICAN has brought in here for us to be able to get Nigeria to know not just tax issue, to know issues relating to economy, finances, taxation, accounting, banking, so many issues. Because we
Thank
have listed some of them and it cover a whole lot of issues. And
thank you
our
very much.
professional colleagues will benefit immensely from this
Thank
program.
you. Thank you very much. We cannot stop thanking the visionary, the 57th president of the institute, that lady of eclat and a lady of class, Mrs. Comfortolu Eitayo Ebenai, FCA, who has clearly said, I want to give knowledge. My people must not continue to work in it, that professional or non-professional. Thank you for your comments. And for our viewers, we are still on. Please stay put. We are not going away yet. Go on a short break, and I'll be back with you very shortly. I thank you for staying on and being part of this educational piece. Understanding the VAT applications, how to register, the do's and don'ts, and the initiative by the Federal Inland Revenue Department to ensure that we capture those taxes that have been seeping through the seams all this while to capture them more. That's exactly what the Institute of Chartered Accountants of Nigeria is set out to be doing. And it's not just now. We're going to continue this episode of learning, of continuous learning. We do it 2 times a week, Tuesdays and Thursdays. So our next episode of another knowledge share is going to be on Thursday, the January 27, 2022, same time, 6 p.m. on our various ICAN medium on social media. Make a point to tell somebody, to also tell somebody to be part of this knowledge, because knowledge at the end of the day is power. The topic we are going to be looking at on Thursday will be accrual basis IPSAS as a tool of public governance. I'm looking at the Nigerian experience thus far. What are the issues? What are the challenges? And what are the notable areas of improvement? I'll be having as my guest Bolaji Osho Esquire, BSc, ACMA, CIS, DGMA, CIS, ACISM, CRIP, and FCA. Bolaji Osho is a consummate professional of cognate experiences in IT as it relates to business processes, as well as in IPSAS and IFRS change management and enhancement. He has outstanding competence in the human and technology requirements of conversion to ongoing adoption of the international reporting standards and the international public accounting standards. You do not want to miss this. I leave you with this quote. You can either invade a country or you leave them alone and trade with them. When goods cross borders, are being stolen. End of quote. And that is attributable to John Stossel. Be the change that you'd like to see, as I always say. And until we meet again here next Thursday, the January 27, 2022, I remain Akifatunke, your anchor. ICAN on air. Bye for now.